Hello, welcome to The Financial Operator. I am Jen Pfizer, owner of MKB. I almost forgot the name of my company. I'm the owner of MKB CFO and Bookkeeping and the host of The Financial Operator. Today, I'm here with Chris Miles, and I'm really excited because I think he's got some really good stories and some advice for our listeners here. So Chris, welcome to the show.
Hey, thanks for having me here today, Jen.
Thanks. Well, so tell me a little bit about yourself.
Yeah, well, I'll bypass all the things like I'm a Virgo, that kind of stuff, because we don't care about that so much. But I'm more known as being the anti-financial advisor because I used to be one. When I got into business 24 years ago, I started out as the mainstream financial advisor. The whole reason I went into business, by the way, is I was actually planning to become a business consultant. But I figured instead of trying to go get an MBA in college and then come out and say, hey, I got my MBA, I should tell you how to run your business when I don't know jack squat in real life what I'm talking about. That's why I actually went to, took a little temporary 1-year sabbatical from my college experience to then go find some business to start. And being a financial advisor was one that came up that I thought was interesting. Because I figure worst case, not only do I learn about business, but I also learn about investing. So I thought, hey, no lose situation here, right? Mm-hmm. Well, I like being an entrepreneur so much that I never actually finished my degree in college. I dropped out, I never went back, and I was going down that path. However, after about 4 years of being a financial advisor, my dad said, well, Chris, when are you going to advise me? And my dad, he was like the post-depression era penny pinching saver, like spend nothing, save everything. Make sure you buy it all on sale, which is why I ate Cap and Crunch for an entire year straight because it was a case lot sale. So that's all we ate for a year.
You have a tongue left. Doesn't that
exactly. The roof of my mouth was damaged permanently because of it, right? So anybody who ate enough Cap and Crunch knows what we're talking about here. Luckily, the next year we switched to Fruity Pebbles. That kind of gave me a break, But that was the kind of guy my dad was. He always just trying to buy things on sale, and so when he asked me to help him out, I thought, great. Not only am I able to help my dad, but I'm sure I can help him retire. Well, I sit down with him. I said, Dad, here's the deal. You're 61 years old, and I see, you've got your investments here. You've saved in your 401k and your retirement accounts for a long time. You've paid off your house, so it was 100% debt-free. I said, but Dad, here's the deal. If you try to retire today, you have just enough money to live maybe for 5 or 6 years. And then at that point, you probably just have to die. And he's like, well, okay, that's not what I want to hear, Mr. Sunshine. Like, what do I do? He's like, I'm already burning out because he was working doing sales for an auto parts type of industry. And so he's like, I'm burning out. He's like, I've already had heart attacks and strokes. This job will literally kill me. What do I got to do? And I said, I don't know. Work longer, save more, and that was the hardest thing is that, my dad, who had quote unquote done everything right, from what I was teaching as a financial advisor, telling people to set it and forget it, save it forever, put it in those mutual funds and then in those retirement accounts, and then you should be able to retire just fine in your 60s. He was literal proof that was a lie. So at that point, I said, well, okay, now what do I do? And about a month later, I'm talking with a friend of mine who I trained to be a financial advisor, but then he quit to go do real estate investing. And as I'm talking with him, he says, Chris, my life is awesome right now. My dad and I have partnered on some real estate deals, and we've now doubled his income as a professor at the local university. I said, hold on a second. I just sat down with your dad like 4 or 5 months ago, and he wasn't anywhere close to replacing his income as a professor. That's too good to be true. It's impossible. He says, well, Chris, let me ask you a question. How many of your clients are actually financially free where they don't worry about money? Well, I said, well, they all worry about money. Even the retired ones still worry about running out of money too soon. Okay, Chris, how about this? How many of you guys as financial advisors are financially free, not off the commissions you're earning, but actually doing these investments you've been recommending? And this is back in end of 2005. And I'm thinking, well, let's see. He can't either. He's been working here since the 1970s. No, he's still working hard too. I guess none. I guess they're all just stuck. They're all in the rat race still. There's your problem, Chris. And then over the following few months, I started going down this other rabbit hole, seeing this whole other world of alternative investing where it's backed by real assets, not just by some speculative thing where, you hear about Tesla or Nvidia and they're going to take off and then they crash or whatever, and you don't have any control of your life. This was like, hey, this is stuff that's backed by real assets, things that actually work. And not only do that, but actually provide real stable income. And that's where I made the switch. Finally, in March 2006, I said, I'll never teach about money again. I'll be a mortgage broker and I'll teach ballroom dancing on the side. And so I was doing that. But of course, I started getting into that space. And later that summer, as I started to do some of my own investing and whatnot, and passively invest, where I was investing it with the people actually doing all the work, but they would pay me a promised return. The next thing I know, I'm getting paid enough that I said I could actually quit. I could actually retire right now, 28, almost 29 years old. And so that shocked me, considering that I thought that, man, wouldn't it be cool if I retired by the time I'm 50, and here I am, not even 30, and I was able to retire. Well, 2007, people wanted to know how I did what I did. So I came out of retirement to teach people how, I got out of the rat race and how they could do it too. And that's right when the recession hit. And so my new business, which was focused towards a lot of real estate investors, ironically enough, they were going broke. They couldn't pay us. And at the same time, my real estate stuff was starting to go under. And so I was getting hit from all the different directions. Plus, I also got, to a brand new house, bought my dream home and everything else. And so the next thing I know, I'm in the hole like $15,000, $16,000 every month. And by, end of 2007, I realized I'm in debt by over $1 million. Mm-hmm. And so as a result, I didn't go bankrupt, although it'd been way easier if I did. But I had to pivot. I stopped teaching people how to get out of the rat race because I was back in it, because I thought that would be kind of hypocritical of me to teach something I wasn't doing anymore. Mm-hmm. So I started teaching people, especially business owners, small business owners, how to find cash, how to find the money so they do have money to invest. And so that became kind of my business model, really starting in 2008, 2009. And I was able to reverse and come out of that hole and pay off all my debt. And by the end of 2016, was once again back out of the rat race. I was financially independent the second time. So I had to prove it twice, not because I'm a genius, but because I messed up the first time. But the cool thing is, obviously, it's not just me, but I've now helped countless others do the same thing too.
Mm-hmm. So are you back involved in real estate?
Not from an active standpoint, but passive, yeah. Oh, absolutely. I mean, that's where we talk about work optional. Like my book is actually called The Work Optional Blueprint that we just released. Talking about how do you actually have enough passive income to work because you want to, not because you have to. And that passive is actually legitimately passive, because a lot of times people throw out passive income and it's like, hey, if you start this new like Amazon dropship business, or you go do this or go do that, but it's always a side hustle or something that takes you away from your business. That's not passive. That's active income. Mm-hmm. And so passive means that you're actually investing with those real estate operators, like for example, or any kind of investment for that matter. So for example, like I have investments where, I lend my money out to real estate investors and they pay me 1% a month. So if I have $100,000, they pay me $1,000 a month on that money. You have $1 million, they pay you $10,000 a month, which for a lot of people, that's usually their minimum goal that they want to hit, just to say, cool, now I don't have to work anymore if I don't want to, but I'm going to keep working just because I want to do something, with my time. Mm-hmm. So that's kind of the cool thing, is that you work because you want to, not because you have to, because your money's now actually doing the work for you versus you working so hard for it.
Mm-hmm. That's interesting, because a lot of the people that I talk to, they want to buy a business or they want to have a business for a lot of those same reasons, right? Like they think that they're going to be in this business. They'll maybe actively work in it. Everybody's always thinking it's a much shorter term. Yeah. And then, exactly. And then all of a sudden it's like, they'll get to this day and like, they don't have to be part of it anymore. And I always feel like we need, first of all, you're probably looking at much longer than whatever you think that those years are going to be, probably 10, 15, 20 plus years before it's actually an option to have it be passive. Mm-hmm. But even then, like, how passive is it really if you are still the one that's having to make a lot of those high level decisions? Whereas you're just talking about having money invested and it's paying you, it's working for you, right, rather than you showing up somewhere. So
yeah, exactly. And trust me, like doing what you just said with business is awesome. Like you can create systems and put people in place that it does take the reliance off of you. I mean, there's a lot of benefits there. I mean, obviously the benefit is you can make money and feel like it's more, I would say, semi-active, right? Like, yes, you're still managing to a certain level. You're managing a stewardship, but you're not like having to deal with the day-to-day operations. That's awesome. But you're right. It's not an overnight thing, right? Where Because the truth is this: if you want something well, like passive income, for example, like truly passive income, you have to have money. That's really the only way around it. Because you're going to invest time and or energy, and sometimes money with that time and energy, or you're going to use your money to do the work. So one of these things has to give. And if you don't have the money, if you don't have the cash to do something, then you're going to leverage time and energy, relationships and everything else, mental, capital and ideas and whatnot that will help you generate income. And that's totally okay. Because from my standpoint, like I've been able to retire twice. Both times I took time off. It was the most depressing time of my life. Both of them.
Really?
Absolutely. Like when I didn't really have a purpose. I noticed for myself, if I work 40, 50 plus hours a week, I burn out. Mm-hmm. But if I don't work at least 5, 10 hours a week, then my fire dies out too. So instead of a burnout, it's like the fire, smolders and burns out. And so I lose that purpose or meaning, in day to day. I'm just not the kind of person to sit around on the beach and drink Mai Tais and stuff like that. I'm a person that like wants to be doing something that's, meaningful, has an impact, Mm-hmm. So that's different for every person. But I realized that, for me, like it's good just to be at that work optional place where you say, you know what, I'm doing this business, not because I need the money, but because this is what I want to be spending my time doing. You get that time. It's really that time opens up to be free to use how you want. And money can do that. If you have extra profit, I know you teach that, especially with being a fractional CFO, you're all about trying to have that profit, especially if you have that profit first, have that money coming in that not just goes back into the business. I like what Mike Michalowicz says in the book, Profit First. Actually, I think he says it in there. If not, I've heard him say it personally. But if you're always reinvesting money back into your business, you're not profitable. Right? Mm-hmm. You're literally not profitable because you're just spending money in the business. Sure, it grows, or hopefully it grows if you're putting more money in your business. But that's not the point. You need to have that profit come out. And then if you can turn that profit into something else to create multiple streams of income, ideally passive, that's better. So I mentioned, like, to give you some examples of what that looks like, because everybody has a different, like when I mention real estate, they think, oh, I've got to buy that property down the street. That's not the case. Although you could do that. That's not what I want to do. I don't want to deal with the tenants, the toilets, and the trash myself. I'm a horrible landlord. If they give me a sob story, I'll probably buy it and then not, hold my boundaries too much. And so instead, what I do is if I do properties like that, I'll buy turnkey real estate properties, turnkey rentals, where there's a company that's usually in those specific areas around the country. Well, they'll say, hey, here's basically the buffet of properties you can buy from. Here's the numbers, projected numbers of what you would make even before you buy it. So then you can do that. You buy the property, they fill it with renters, they deal with the paperwork, they're dealing with all that crap. You just have to give them the okay on stuff. So very rarely, even with our properties, like, in any given property, like it might be once every several months, maybe once every few years, you might have to answer a question about one of those properties, Now, granted, if something does come up that could be more severe, like if they got to, kick somebody out, well, cool. Luckily, you're not dealing with that crap, right? You might still have to tell them, hey, like for example, we had somebody recently, one of our property managers say, hey, listen, we're noticing that we just, the tenant left, they were with us for 7 years. It was awesome. But then when the tenant left, we couldn't fill it again because the market had shifted and changed to where we would have to lower the rent. So they asked me, hey, Chris, are you okay if we lower the rent? Do whatever it takes. If we have to do that, then lower the rent. Fine. And so we did, things like that. Mm-hmm. But other than that, it's not like I'm dealing with anything day to day on the operations side. It's more of a management type thing. Like I said before, there's a stewardship there. I mentioned lending my money out. Lending has definitely been better because I can lend my money and then let them deal with all that hassle and then I'll have to do it. Now, the cool thing is because I'm becoming the bank in that sense, if they don't pay me, the investor, they don't pay me back, guess what? I've got a property that I can then foreclose on. Just like if you have a mortgage on your house and you don't pay that monthly payment, you don't have to deal with all this stuff day to day, right? You're not like, if you have to repair something in the house, you're not calling up your bank with a mortgage saying, hey, can you help me out here? Like, I got to fix this plumbing issue, or, hey, I had, this electrical issue going on. They don't care. Like, you never call the bank. And that's the same thing with us as lenders too. We don't have to be the ones to deal with any of that crap. And so, but obviously if something does go wrong and you don't make the payments, then the bank's going to take that property away from you. And you could do the same thing when you lend your money. So things like that.
I was going to ask, how often does that ever happen? Have you had to read?
Well, it depends on, who you work with. It's usually pretty rare, but if you get somebody who's really good at like really vetting those kind of things out, so it is pretty rare to see that happen, but it can. And even if you're like worried about that one property, if you're trying to do that one, there are some debt funds out there where you could put your money in with the pool of money that they go and lend out to many different investments, right? And so in that case, they're not worried about that one deal that goes bad. Now you're in a fund where it's spread the risk out among several, so there's lots of different ways to do it. I even have the closest thing I have to a business in this case, where it does give me some tax advantages. I have a real estate partnership where I'm the 70% owner, they're 30%, but they do all the work. Like they're literally buying and selling raw land, like dirt, buying and selling it. They'll buy it at wholesale. They'll use my money. I'm the financer. They'll buy it at wholesale, turn around, sell it at retail, and then even charge interest on that too, in many cases. So, it might buy a piece of land for $8,000, but then we'll turn around and sell it for like $25,000, and even if it's 0% interest, for 10 years, who cares? Because you're still tripling your money in 10 years, right? So there's a lot of cool things that can be done in that space that I personally, even as a financial advisor, never knew was available to me because, well, let's be honest, financial advisors are not financial experts. They're financially paid to sell you just one tiny little suite of products, So that's why I tell people like avoid, fire the financial advisors, like if you're just going to buy a bunch of mutual funds, whatever. But the problem is it's already been proven. My dad was living proof of it. And so many millions of others, even now, are proving, even though we've had the best, stock market run the last 17 years, really the best run of your lifetime has happened the last 17 years. You'll never see it any better than it is now. And still only a couple percent of people are able to truly retire comfortably. That should scare the crap out of you.
So going back to your dad's story, so had he been investing basically his entire career and was he using like a 401k, like those traditional models? Yeah.
And unlike us as business owners, right, where if you try to do the 401k and you pay the match, you have to pay your own match, right? He wasn't a business owner. He was getting paid a match. It was free money, right? That brainless option that you're told to have. He did it, and it just wasn't enough, even though he was saving and putting away every single paycheck.
That's a scary realization, I think, especially if you're waiting until, did you say he was like 61 before he kind of thought to sit down and be like, okay, what does my plan look like for retirement? We're all just investing with that thought, right? Like that you're just going to keep investing and eventually it's going to pay off and you'll be able to retire. But we don't have a lot of those. Like my parents are probably the last people on earth, like age-wise, to both have pensions when they retired. And so like, luckily they've had that supplemental income that comes with that. I think we have like teachers unions that get pensions and maybe some of the other unions, but I think even like Teamsters, I know they don't have pensions anymore. And, like all of these things that used to be what you relied on when you retired just don't exist anymore. So I think it's really important to know about these other options that are available that are not really talked about, right? Unless you're in the circles of people that talk about them.
Yeah, it's kind of like Wizard of Oz, like don't look at the man behind the curtain, right? And the man behind the curtain really is the financial institutions, the companies that are controlling the education that's taught out there. I mean, all the financial news media and everything, guess who tells them, what to say? It's the financial institutions like the Fidelities, the Merrill Lynches, the Goldman Sachs, right? Those are the companies that are saying, this is what you teach. This is what you do. You just do it like this. Don't even think about it. Just set it and forget it. And don't worry, someday you'll have enough money, you'll have millions, and you'll be able to retire. But the reality is it's just not that pretty, right? Like, for example, Fidelity, it's the largest 401k provider in the country. Fidelity has 45 million account holders of both 401ks and IRAs. But did you know only 1.1 million of those right now, as of 2025, well, 2026 now, but at the end of 2025, only 1.1 million account holders actually had $1 million or more.
Wow.
Now you might think, oh, well, still, that's not bad if you have, 700,000 or something. Like, well, here's the deal. In the financial community, we're taught as advisors to tell you, you can, if you try to retire in your 60s, you can live on 3% a year. If you might have heard people talk about the 4% rule back in the day, the problem with the 4% rule is it was created by running numbers from 1926 to 1976. It's literally 50-year-old data they were using when people lived shorter time and inflation wasn't as bad. So now it's more like a 3% rule unless you wait till your 70s to retire. Well, think about it. If you have $1 million saved up, that means you'll live on $30,000 a year. Like that's not poverty. Even, it's below the poverty line. Exactly. Yeah. Right. So you're a broke millionaire is what you are. And this is why there's another study done by Transamerica who did a survey on those same people that had over $1 million in their accounts. And 35% of those people surveyed said it will, quote, take a miracle for me to be able to retire, because they came to that same realization of, wait a minute, I have $1 million, $30,000 a year. I need to have at least more like $3 to $4 million saved up, not $1 million. Yet only about 2.5% of people of infidelity have at least $1 million. So that's why I mean, like, it's such a small percentage of people that actually find any freedom. And it's usually because they make such a sick amount of money and they pack so much of that money away, then they're able to do it, but they're still living on less than what they were packing away. That's the scary part that nobody wants to tell you in the financial world. No financial advisor wants to say it. But again, you ask them if they're financially free, they're not. The only ones I've seen that might come close, and again, they'll say they're financially free, but it's usually because one, they're thinking about the money they're getting from you, keeping your money there because they're paid percentage off of how much money you've invested with them. If you have $1 million, they get paid 1%. They're making $10,000 a year. Naturally, they're not going to tell you, hey, there's a better option over in this real estate game over here. But since I'll lose $10,000 a year, I'm not going to tell you about it. That's if they know about it, right? But the other problem is that, when you have them, I also see people that, because the financial advisors make such good money because they're such good salespeople, or they deal with a very high clientele. Well, they've packed away tens of millions of dollars. Then they're like, well, yeah, I could retire. Well, yeah, not because your investments did a good job, but because you were packing away a lot of money. And I've told a lot of people this, even the people that are in the W-2 space, not even business owners. I was like, often if I ever do see people that might have enough to retire, it's often because they were business owners who just packed away like literally hundreds of thousands, if not millions of dollars, or they exited their business, sold it for a multiple, right? And then of course came away with this large lump sum, and then they're able to do it. Not because their investments did a good job, but because they did a good job. Mm-hmm. And that's the thing you have to distinguish between reality and the really just the story, right? The lie is that's not the case. So you have to be careful. Like, I'm just telling you from my own experience and literally looking at thousands of people's finances, it's just a broken system and it doesn't work.
So you mentioned earlier, obviously you have to have money to start with this, but what would be kind of that entry level amount that someone would need to get started with the programs that you run?
If they have at least a couple $100,000, that's a good place to start, because you can start to diversify a little bit. Mm-hmm. I hesitate with people that have less than 100,000, especially because, like, say for example, an investment requires literally a minimum of $100,000. Well, now you're all in on that one investment, right? Mm-hmm. And that can be a scary thing, because the truth is that even though it's backed by real assets, it doesn't mean it's risk-free. Nothing is, right?
Right.
Granted, I think it's less risky than putting my money in the market and almost guaranteeing that I'm going to fail. And especially because I really do expect the market's going to come crashing here pretty quick. But no, you need to have at least a few $100,000 to get started. Because like I said, like say you have $200,000 and you make 10% on that money overall with the different investments you do, that's $20,000 a year. So it won't make you free, but it will definitely help. I had one guy who he was actually one of the top ranking generals in the state of California for the National Guard. He had $1 million that he got from his retirement plan. His advisor said you can live on $30,000 a year. He said, well, that's not enough, especially in California. So he started listening to podcasts, eventually heard me on one podcast, and then started following our Money Ripples podcast. And then after he reached out, he says, I think I want to start trying to do this. And so in his case, he ended up buying a couple duplexes that were managed by other property managers. He lent out his money. He got some ownership in some apartment buildings. He even did some oil and gas investments. That's another one that's been doing okay as well. And And so between all of those, his million, instead of kicking off 30,000 a year, now was kicking off over 130,000 a year because of what was actually, generating real income for him. What was cool though, is that he started teaching his kids who were like in their 20s, teaching them how to do it. And took them to conferences and stuff to learn this whole other side of investing that people just never usually hear about unless you're wealthy. You usually don't hear about it. And then just this last year in 2025, I got a text from his best friend who said, "Hey, I just want to let you know, Dan, he was 60 when I helped him out and he retired. He was 64. He's like, hey, Dan just passed away of a heart attack the other day. I just want to let you know that he talked about you all the time and how you changed his life, and that meant a lot to me because he was on my podcast twice. He was on before we even started investing. And then he came on 6 months later to say, here's what I did. Here's the results, and it was kind of cool to see that transformation and see him, start to do things like projects he wanted to work on. Like he was working for the Forest Service to do some projects and things like that. And so it's kind of cool to see that at least we were able to buy his time back with whatever little time he had left. It was really only about 4 years he had before he passed away. So unexpected, obviously, but that's the thing is that our days are numbered. We don't know how long we have to live, and really buying your time back is essential. And I'll tell you, even as a business owner, one of my biggest secrets of success in business is to not need the money. And I don't know if you've ever noticed that before too. And even with clients you work with where the more desperate they are, the harder it is to make money. If you ever go to any networking events, like Chamber of Commerce or anything like that, and they're throwing business card at you left and right, and it's like giving you paper cuts because they try to shove it in your hand so quickly, right? It's like you get this ick feeling. You feel like you have to shower after you go to those events, and it's because people are desperate for money. They need your business, and as a result, you don't really trust them. Contrast that to being in a place where you come from a place of power. You're like, I don't need your business. Like, I really don't. I'm just fine with or without it. But I know that what I do in my business can actually help you. Like I can actually make a difference for you, with that service or that product that we offer. And that when you come from that place of power, ironically, people say yes to you more often. I actually had a chiropractor where that happened with him, where he was 62 years old by that point. Most people we work with are usually like about 60 or under, 35 to 60, give or take. But he was 62, burning out in his practice because year after year, he was showing less and less profit. And he's like, you know what? I'm getting tired of it. It's been so hard. And when we looked at the finances, he had about $500,000 in his retirement plans and his IRAs. And I said, okay, well, this is not generating any income for you. Well, what if we did this? And not even just with investing. Just so you know, this was pre-investing. We said, well, obviously, I think there's some things we could do here. One, we could probably refinance your mortgage because he was just trying to aggressively pay it off so he can be debt-free, like everybody teaches you to do, like good old Dave Ramsey, and try to do this stuff. And so he's trying to pay off his mortgage. I said, well, what if we refinance your mortgage? He said, well, if we do that, I won't pay it off a 30-year mortgage till I'm 92. Like, that's okay. Because we can free up money. We can also pay off these specific loans. I have a very specific calculation I created back in 2008 called the cash flow index that now people are starting to pick up on. But I told him, like, here, if we use this, we can pay off these specific loans. And between that and refinancing your house, we'll free up $4,200 a month, $50,000 a year, no money out of pocket. He's like, I don't know. And I said, actually, I take that back. The refinance was no money out of pocket, but with paying off some of those loans, we could use $100,000 to free up the $50,000 a year. And I said, if you do that from your IRA, well, now we got some cash flow we can actually free up. He said, yeah, but Chris, how am I going to be able to retire? I said, hold on. What's the whole point of retirement? It's cash flow. This is $50,000 a year immediately. Did you get in cash flow? Yeah, but how am I going to retire? And it's always the wife that gets it first because they usually have more common sense. And she stopped and she's like, listen, you still have $400,000 left, even if you use this $100,000. This makes sense. Let's do it. So he did. He freed up that $4,200 a month. So he freed up $50,000 a year. We also found some ways that save him on taxes when we had to meet with one of our CPAs that we refer to. And I think we found another $24,000 a year, about a little over $20,000 a year on that front too. So in total, we found like $70,000 a year. We were able to free up that first year and just cash flow, not even investing. And then by doing that, of course, that helped him relax because now it's $73,000. I mean, that's about $6,000 a month back in his pocket, right? Well, he relaxed. And the crazy thing is because he relaxed because he didn't need the money, guess what happened to his conversion ratios inside the practice? They went up, right? Because now he was actually starting to have fun again. He was starting to relax a little bit. More people started to say yes. He didn't have more leads coming in. He didn't need more customers. They just started saying yes more because he wasn't so stressed about money. And I think that's the magic superpower when you have, cash flow that's under control, which I know you know firsthand. And especially when you have multiple streams of passive income where you work because you want to, not because you have to. As a business owner, like it's amazing how powerful that is and how running your own business actually becomes easier because people will say yes when you don't need the money anymore.
Okay, so I have a couple of scenarios of people that I am thinking of in my head. And I would like to run past you, like, how does this work in these scenarios? So like person number one, let's say they're in their mid 40s. So in the general, like normal retirement age, they would have like 20 years left of work. But they've done a really good job of saving. So all of the money that they have is in a 401k. Is there a way that they can take that money prior to retirement age and invest it in other things?
Short answer is yes. Does it look pretty sometimes? Not always, right? Assuming they're a business owner, not a W-2 employee, right?
Well, they would be W-2.
Okay, they're W-2. Here's the problem. If it's a 401k with the current employer, then it's locked up. And this is what I tell people, like, be aware of 401ks and whatnot, because it's literally locking your money up in prison. It's a negative 100% return of your money because your money goes in, but you can't get it back out, right? So the only way you can do it, usually, if you're in your mid 40s, is pretty much quit or change jobs.
Got it. Okay.
Yeah, hopefully not laid off. I've had a lot of clients that have recently become laid off, especially in the tech and the financial spaces. But yeah, if it's with a current employer, it's locked up. Now, if it's not, say it's a previous employer or maybe it's like an IRA or something like that, then you have options because you can then roll over into what's called a self-directed IRA, where it's an IRA where you get to pick and choose where these go. And yes, most of the investments I just talked about, you can actually invest just fine with inside of a self-directed IRA and actually start building up that account potentially much faster than gambling in the stock market.
Okay. So in that same scenario, if the person is a business owner, then they don't have to go through that. Like they can self-direct their own 401k.
Usually, yeah. I mean, sometimes it's a pain in the butt because you might have to you might have to even shut down the 401k plan to get it out. Sometimes they might let you just access your money while leaving the employee's money alone. I did have one dentist, for example, where he had about 10 people in his company, in his small company. And I mentioned to him, I was like, well, what if you just shut down the 401k? He's like, well, I could. He's like, I know this one person will complain about it, but then again, she complains about everything that we do. And I was like, yeah, you got to have one of those toxic people, right? So I said, well, here's what you could do to kind of spin it better is what's the match on that 401k? He says, I'll match up to 3%. I'm like, great. What if you told all your employees, hey, effective immediately, we're shutting down the 401k plan, but I'm giving you all a 3% raise. So they get the money, but they get to choose where that money goes. They can use it to pay off credit cards. They can use it to go on vacation. They can use it for whatever. They can go do their own Roth IRAs, which can be a better option than the 401k, right? They can do all kinds of stuff with it. So now they get the power to do it. So he did. He announced it to the company. The one lady complained, but she did not refuse the 3% raise. So she did not complain about that part. So he's able to do that. He's able to then, because they were able to shut down the 401k plan, get his money out, and then he was able to invest it the way he wanted.
Okay. So let's then go with somebody that's already retired. Say they are, they have had their money. Obviously now they're not working, right? They can use their money. They're past the age where they can withdraw whatever they want. So that is a fairly easy transition, right? It sounds like to be able to, pull that money out. I
just had a guy recently come to me. He was 59. He had just turned 59 and a half. So he's like, hey, I can barely access these. And he was even still working in his job too. He was a W-2 employee. He had about $2 million in his plan, that he had at work. And he said, I don't know if there's any options. He's like, I kept trying to meet with my Vanguard advisor, but he didn't really give me anything, solid, because I want to live on $200,000 a year. And I said, well, either he doesn't know how to tell you how to get to 200,000 a year, or he's scared to, because if we use the 3% rule for you, that means you would have to build that $2 million up to about $7 million. And he said, oh man, he's like, I don't want to work until I'm 70. He's like, I'm actually willing to work till I'm 70. I just don't want to feel like I'm forced to work until I'm 70. Again, you want to be more work optional, right? I said, well, here's a cool thing. You've got, about $2 million. If you're able to take that money and instead invest it, and of course, you won't have the early withdrawal penalties. He'll have taxes, but he won't have early withdrawal penalties. I said, if you invest that money and again, get just 10%, how much is that per year? $200,000 per year. What was your goal? $200,000 a year. Great. So you just went from, I hope and pray that by the time I'm 70 in the next 11 years, that I'll have enough in the market to finally get my $200,000 a year. And that's assuming inflation doesn't go up during that time, which we all know will, I'm like, or you could do it this year. And then you don't have to worry about inflation not keeping up. You said.
We also talk about how after the age of 21, like the next fun birthday is 59 and a half. Like, you got to go a long time.
I know. I think that's the problem, is that most people don't realize, I especially because I work with a lot of Gen Xers and some Xennials and whatnot. And really like what shocks people the most is, especially if they're in their 40s and 50s, right? Or even 30s sometimes, is wait, I don't have to work until I'm like 60, 65, 70 years old. And the answer is no, you don't. But the problem is that if you follow the advice that's always been given, at minimum, you're gonna be working into your 60s, if not into your 70s, following that kind of advice. And so it's not about whether you're gonna work that long or not. It's about, do I want the option to have to keep working that long? Do I want to have the freedom to be able to step away if I ever choose to, or something changes in my life? Because I always tell people, I always reserve the right to change my mind, because what I might prioritize and think what my plans are today may not be the case even, in 5 or 10 years, let alone next year, because something could happen that just totally throws you off, or you have a midlife crisis or something, So I have one client that he found out he has a disease that can kill him any minute. Like it's like one of those things where like it weakens the artery walls. So like he could just all of a sudden, hemorrhage and have a heart attack right then and there. And he's only in his 50s. And so when he found that out from the doctor, he said, man, like, why am I doing, like, I'm working and doing all this stuff. Like, what about my kids? I want to teach my kids things. I want them to not do what I did, And so we were able to get him to the point he was, financially independent, work optional. And now like he's trying to teach the next generation, right, to learn the things that we taught him too, so that they can start now in their teens and 20s and be way more set for life than he was himself.
Mm-hmm. Okay. So before we dive into a long topic, I'm sure we could probably continue this conversation for hours, but you have a podcast, right? So if somebody is really interested in this and wants to kind of learn some more, they can listen to that. Tell me where to find it.
Yeah, Money Ripples podcast. Anywhere you listen to podcasts, whether Spotify, Apple, even YouTube. We got our YouTube channel, Money Ripples with Chris Miles, that has the podcast on there too. We're actually now 12 years in on our podcast. So we're now over 1,000 episodes deep. So yeah, I've got a lot of fun stuff. And actually, we're actually now just starting to release some new videos. So there's additional content in addition to the podcast we're releasing now too.
Okay, so that's great. If somebody wanted to work with you, or if you figure out how you're doing what you're doing, is there a way they can do that?
Yeah, moneyripples.com. Pretty much just remember Money Ripples, whether it's at Money Ripples on social media, moneyripples.com, Money Ripples podcast. I mean, everything pretty much points the same direction. Okay,
perfect. Well, any last closing piece of advice or things that you would like to really just hammer home?
Yeah, I think the biggest advice is really, I'm going to say this more kind of backing up to what the general theme of my book is. When I talk about how to become work optional, if there's really 3 steps to do it in, it's 1 is get lean, 2 is get liquid, and 3 is get out. So get lean just means, you teach a lot of this with being a fractional CFO, is like, how do we actually like not be cheap, but how can we get leaner, right? Like, how can we make sure that when we're spending our money on, it actually moves the needle for us? This is true in your personal life, not just in your business life. So how can I be more profitable? Not just live on rice and beans, as good old Dave Ramsey would say. So it's being a wise steward of your money. Get liquid means have liquid cash available. Don't lock up in prison like the 401ks. Don't lock up in the equity in your house, which you can't really get to when you need it the most, right? Is have that money in your possession. That's why we talk about like infinite banking and concepts like that. And then get it out. Once that money's liquid and in your power and control, then you can get it out into passive investments that can actually pay you on a monthly and or quarterly basis, those kind of things. And that helps, again, create more financial stability in your life, especially if you have another 2020 where all of a sudden you become a non-essential business, especially if you're a blue collar, you witnessed that firsthand. It sucked. Definitely having multiple streams of income will ensure that you protect your family first and foremost.
Okay. Well, thank you, Chris. It was a pleasure talking with you today. And everyone that's listening, go check him out. Listen to the podcast and buy his book for sure. So thank you.
Check me out.
Yeah, there you go. All right. I'm sure I'll talk to you soon. I already have a couple people in mind that I'm like, I need to send them your podcast. So.
Oh, I appreciate that. That's awesome.
All right. Thank you.